Hi everyone, welcome back to Corporate Decoder. Today we are diving into a company that's trying to power up the world, but are they running on empty themselves? We will be decoding their recent filing, and you might be surprised by what we find. EOS Energy Enterprises just filed a report about some big changes to their financing and stock. They're making moves to get more money, but is it enough to keep them going? Are they betting big or just trying to stay afloat? Let's find out. If you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below where you can discuss these companies even more. This is a Form 8K, which is a report companies file when big stuff happens, things shareholders need to know about right away. In this case, it's about changes to their debt and a big stock offering, selling a lot of stock. The important date here is May 28, 2025, because that's when a lot of this stuff happened. It's the date of the earliest event reported. This report is about EOS Energy Enterprises, Inc., a company focused on energy storage solutions, basically making big batteries. Okay, IM 1.01 is where we find the juicy details on agreements. Let's see what deals they've been making. The first big thing is an amendment to their credit agreement. This means they've changed the terms of how they borrow money. They've made a deal with their lenders who they borrowed money from. They're dealing with Cerberus, a big investment firm. Cerberus is the administrative agent, basically the middleman managing the loan. EOS has a $210.5 million multi-draw loan, meaning they can take the money out in chunks. They also have a $105 million revolving credit facility, like a credit card for businesses, but it depends on them paying back their debt fully. On May 29, 2025, they made a third amendment. This changes their existing loan agreement, specifically the definition of what they call a specified refinancing transaction. A refinancing transaction is getting a new loan to pay off an old one. They are changing the details of what can be refinanced. This could mean they're planning to change how they manage their debt. If you really want to dig in, you can find the full details of the third credit agreement amendment in Exhibit 10 of this report. Now let's scroll down to Item 8.01. Titled Other Events. This is where they report anything else that's important but doesn't fit neatly into other categories. On May 29, 2025, EOS entered into an underwriting agreement. This is with Jefferies LLC and JP Morgan Securities LLC, basically big banks helping them sell stock to the public. EOS agreed to sell a whopping 18,750,000 shares of their stock at $4.00 each. This is called an offering. They're raising money by selling pieces of the company. The banks also have an option to buy even more shares, another 2,812,500 shares. They can buy them within 30 days of May 29, 2025. On May 30, 2025, they went ahead and used that option to buy even more. The whole stock sale was completed on June 2, 2025. The underwriting agreement has standard protections for the banks. EOS promises they're not lying about the company and will cover the banks if they get sued because of the stock sale. These protections are required by law, specifically the Securities Act of 1933. All of this stock selling is happening under a registration statement. That means EOS told the SEC, Securities and Exchange Commission they were going to sell stock. You can read the whole underwriting agreement in Exhibit 1.1. And there's a legal opinion in Exhibit 5.1 about the stock being legally sold. Now let's step back and look at what's happening here. EOS is changing its loan agreement probably to give itself more flexibility, and they're also selling a lot of stock. What are the strengths of this situation? Well, EOS is getting more money. That can help them build more batteries, pay their bills, and invest in the future. Having more cash on hand is always a good thing, especially for a company still growing. What are the weaknesses? Selling stock means each share of stock is now worth less, because you have more shares dividing the same amount of company ownership. Also, having to keep changing the loan agreements might mean EOS is struggling to meet the original terms. This could worry investors. What are the opportunities? Energy storage is a growing field. If EOS can make good batteries and sell them well, they could become a major player. The world needs better ways to store energy, and EOS is trying to provide that. What are the risks? EOS faces competition from other battery makers, and they need to keep innovating to stay ahead. They also need to manage their debt carefully. If they can't pay it back, they could get into serious trouble. In conclusion, EOS is making moves to secure its financial future. They're getting more money, but it comes with some trade-offs. They need to use this money wisely to grow their business and avoid getting weighed down by debt. The future of EOS depends on whether they can turn these changes into a real success story. Alright, that's our breakdown of EOS Energy Enterprises' recent filings. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.